Hey folks, welcome to another product review at Finominal. Today we're going to have a look at JEPI, which is JP Morgan's Equity Premium Income ETF, and that is the largest actively managed ETF with almost 30 billion of asset management. It charges 0.35%, so it's not something that immediately flags as super expensive, but also not super cheap. So let's find out what it does. First thing that I do when I come across a strategy that I'm not that familiar with is I go to the performance benchmarker, and that simply gives me an indication of what a benchmark is and kind of like a first feel for what the product does. So I can see over here the suggested benchmark is the MSCI US Minimum Volatility Index, and we measure that here a combination of the R squared and the tracking error. And indeed, if I look at the chart, I can see the performance of JEPI was quite similar to performance of that Min US Vol Index, especially compared to S&P 500. Next thing I want to do is I want to confirm that indeed it does have low volatility exposure, and I go to a tool called Know Your Factors. So Know Your Factors effectively does a bottom-up and a top-down factor exposure analysis. I'm going to jump straight to the kind of like regression-based top-down analysis. So over here I see the factor betas to like a few popular equity factors, and indeed I do see that positive exposure to the low volatility factor. I see minor exposure to other factors. The kind of effect exposure that's most concerning when I look at this product is the kind of like negative exposure to the quality factor, which effectively means that this portfolio contains stocks that are low from a profitability perspective or high from a leverage perspective. Now, if I look at the effective betas on asset class level, I do see that the beta to the S&P 500 was below 1, which effectively might implicate that this is a diversifying strategy. So let's evaluate that. And I'm going to go to a tool called Diversification Booster, where effectively I'm going to get a bunch of statistics that show me if this is a strategy that might be interesting to add to my portfolio. And with that I mean a traditional 60-40 one. I can see the correlation to stocks is 0.87. That makes it not uncorrelated to stock markets. I can see the upside beta to S&P 500 is the same thing as downside beta, which is not that favorable. But perhaps more interesting is if I simulate adding JEPI to a portfolio comprised of the S&P 500, and I'm talking about a 25% allocation, my Sharpe goes up from 0.89 to 0.94. That's not bad. But if I take a strategy that is considered like more like a traditional diversifier, and in this case I'm talking about managed futures, and I'm taking DBMF, that's an ETF as a proxy, here my Sharpe goes to 101. So that's not bad for DBMF, but not that great for JEPI. And the final thing I want to confirm is how different is this from a traditional low vol product. And for that I can go to Securities Analyzer. I'm going to use JEPI, and I'm going to use kind of like well-known low vol product SPLV, which is from Invesco, and I'm simply going to see how similar or how different they are. And I'm going to focus on the performance over the last 2 years. And again, I see that this clearly, so JEPI clearly provides the same risk and return profile as a low vol product. The performance is also identical. And so the question is, like, what attracts so many investors to JEPI? And that is something we can show up here. It is the dividend yield. So the dividend yield of JEPI is 8.65, which is significantly higher than most other equity products, and they are able to accomplish that by selling call options on the S&P 500. Now, that's not bad in terms of such a high yield, but effectively from a total return perspective, you're getting nothing else than any standard low vol product, which by the way would be a lot cheaper. So I'm going to leave it at that. So if I think about JEPI, right? What did we learn? We learned it's basically a low vol product with a high dividend yield, and not that diversifying, right? Not expensive either, right? So if you buy it, now at least you have the right reasons for buying it. Have a nice day.